Hello everyone, welcome to the part of course which will deal with the technical analysis. A technical analysis is based on an analysis of the movement of price of certain financial instrument through history and based on that analysis predicting price movement of the same instrument in the future. A very important aspect of technical analysis is the study of human psychology and the psychology of the masses. What do we mean by this? Since technical analysis is used on the stock markets for over 100 years, traders have established certain patterns that indicate certain directions of price movement after the formation of these patterns. Since these patterns are used in stock exchange for a long time and have given good results previously, traders are considered that this trend will continue in the future. This means that when one of the known forms of technical analysis, for example head and shoulders, form on a graph, a large number of traders who use technical analysis begin to think the same and enter the same position after this pattern is formed. This tells us that with the technical analysis, we can presume the opinion of the masses. It is especially important to understand on the Forex market because it's decentralized and as we mentioned in the previous part of the course, there are very big players on the Forex market whose trading volume may affect the direction of price movement and therefore turn the psychology of the masses in their favor. Besides these patterns, technical analysis involves the use of specific tools as well as the oscillators and indicators which are obtained by mathematical processing of data regarding price movement. Technical analysis is usually used for evaluating short-term price movements, although it can be effective to determine the long-term direction of price movement by combining with fundamental analysis. Before we explain the use of patterns and tools of technical analysis, it is necessary to say something about the price movements on financial markets. What we are talking about now is basis of technical analysis, which is still widely used, and without them technical forms would not make any sense. Of course, we are talking about trends. A trend represents the direction of price movement. It is visually noticing, and depending on the direction of price movement, it can be uptrend, downtrend, and side-based trends. Although we can conclude what kind of trend is it just by looking at the graph, there are certain rules that are specific to each type of trends. As we can see in this graph, it shows a growing trend or uptrend. Now we can move on to the picture that shows a growing trend and say something about its features. First, we need to say that we can observe trend at all time frames. It depends on our trading strategy which trend we are going to observe. Although there is a rule that the main trends are observed at the longer time frames, and these trends are formed for several months or even several years, while smaller corrective trends we observed in smaller time frames and they last for a period of several days to several months. The main characteristic of the growing trend is that each new bottom which is being formed should be higher than the previous. In this picture we see that numbered 1, 2, 3, 4 and 5. Each new bottom is higher than the previous. Another characteristic of the growing trend is that every new top that is formed is higher than the previous one. In this picture we see that marked with letters A, B, C, D, E and F. As long as each new bottom and top is higher compared to the previous, it is considered that the trend is still strong and that will continue. So traders should place their position in accordance with the movement of the trend or should take buy positions. The first sign that the trend is weakening and will perhaps come to a trend reversal we can see in point 6, where we see that the previous bottom, marked with number 5, is broken. This situation indicates that traders should consider taking a sell position in this financial instrument in the upcoming period. We will now show a downtrend. The essence is the same as with the growing trend, but in this case each new bottom is lower than the previous, and each new top is lower than the previous one. As we see in the picture, bottoms or lows are marked with letters A, B, C, D, E, while the tops or highs are numbered 1, 2, 3, 4, and 5. Point 6 shows the breakthrough point of the previous peak, and that gives the first indication that the decreasing trend is weakening and will perhaps come to a trend reversal. There is another type of trend, and that trend is called sideways trend. The characteristic of this price movement is that the price is moving in a framework that does not have specifically defined growth or fall. The highs and lows are not formed by any rules, and for this reason for traders it is very difficult to determine in which direction the price will go. This is the main reason why many traders avoid trading with those currency pairs and other financial instruments which trends cannot be determined.